It's the last but one episode of Business Morning for the week. You're welcome to 55 minutes of great business talk on Channels Television. I'm Ini John Mekwa. Let's start off from the oil space now. Prices edged down today after rallying on an unexpected drop in U.S. crude inventories in the previous session as investors await the outcome of the U.S.-Iran nuclear talks that could add crude supplies quickly to global markets. Brent crude futures slid 7 cents to $91.48 a barrel, while U.S. West Texas Intermediate crude was at $89.62 a barrel. That's less 4 cents. Robust demand recovery from the coronavirus pandemic has kept global oil supplies snug, with inventories at key field hubs globally hovering at multi-year lows. U.S. product supply, the best proxy for demand, peaked at 21.9 million barrels per day over the past 4 weeks. And that was because of strong economic activity nationwide. However, investors are closely watching the outcome of the U.S.-Iran nuclear talks, which resumed this week. A deal could lift U.S. sanctions on Iranian oil and ease global supply tightness. Well, let's come to Nigeria now, where Lagos State has once again emerged as the highest in value of foreign direct investment, as indicated by the data of the Nigerian Investment Promotion Commission for the year 2021. The commission noted that investment pledges by foreign and local investors rose by $23.30 billion in the previous year, while total investment tracked in the year is 39% more than the value tracked in 2020, which was $16.74 billion.
The top 5 states by value of investment in the investment announcement recorded in 2021 are Lagos State. Lagos State attracted $8.7 billion in terms of investment announcement, the led the pack for 2021. Bayelsa State came second with $3.6 billion. The Delta State was third with $2.9 billion. Akwa Ibom State, $2 billion. And Adamawa State, $1 billion US. The manufacturing sector had the highest number of projects announced, 20 in number, as well as the highest value. So not only did the manufacturing attract the highest number of projects, they also attracted the highest number of highest value in the amount of $10.5 billion US, which represented 45% of the investment announcement. Construction got 16%, electricity, gas, steam, and air conditioning supply 13%, information and communication 12%, mining and quarry 9%. These made up the top 5 sectors for the year.
And now let's look at the financial sector in Nigeria. Low interest rates, high effective tax rates, and competition from telcos and fintechs are some of the top risks that Nigerian banks are likely to face in 2022, and that's according to a report by Renaissance Capital. Well, we have to elaborate on that report, Adesoji Sholanke, Director of Financials, Tech and Fintech at Renaissance Capital, joining us now from London. Hello, Adesoji, good morning.
Morning. Good to be here.
Good to have you. So tell us about this report. How did you arrive at your findings, and what method did you use? Bring us up to speed with that.
Sure. So Renaissance Capital, we're an emerging and frontier market-focused investment bank. We have colleagues on the ground in different markets in Africa, including Nigeria. I sit in our London office. Basically, there's 2 primary ways you could approach equity research. So one way is to take a top-down approach. Another way is bottoms up. We basically adopt both methods, but we typically think of ourselves as specialists in the bottom-up approach. So a lot of speaking to people on the ground, speaking to companies, speaking to regulators, speaking to the companies that we cover as well, and also spending a lot of time trying to understand the numbers. So that's pretty much how we approach research, if I'm to simplify the process.
And then your finding shows that you call it low interest rate is also a risk that the banks are to face this year, 2022. But at 11.5%, a lot of people would say that's not a low interest rate.
Okay, I believe you're referring to the central bank policy rate. So that's correct. It's indeed 11.5%. But you also need to look at the makeup of the balance sheet of the bank. What actual assets sit on their balance sheet and what actually earns an interest. So if you break that down, what you find out is that about 40% of Nigerian banks total assets sits in cash reserves and central bank special bills, which basically earn 0% to 0.5%. That's nothing, right? So that's 40% of your total assets earning close to nothing. Then you need to start to look at what else is left there. When you then start to look at interest earning assets, you look at treasury bills, you look at bonds. On the treasury bill side, on the OMO instruments, the yields there range 8 to 10% thereabouts, but the central bank hasn't been doing aggressive open market operations. On the federal government treasury bills, the interest rates there range between maybe 2 to 5%, somewhere in that range. The interest rates are on the T-bills are still very low. On federal government bonds, interest rates there are north of 10%. Okay, but that also brings with itself its attendant liquidity risk. So when you bring all of this together, what you saw last year was that net interest margins for the banks did collapse. They reduced by, I believe, about 80 basis points for the banks that we look at. Looking ahead, we don't think the outlook for interest rate is the upside. We think interest rates probably stay somewhat flattish this year, which means that the outlook for margin is probably they stay the course. We're also just 1 year into elections, so that also means that the central bank probably maintains its current posture around the policy rate. So that's our view on the outlook for margins and overall interest rates for Nigerian banks.
Just wondering, the newly introduced income tax, what impacts will it have in that space?
Which income tax are you referring to?
The
are you
one,
referring to the? Go ahead.
Yeah, the one that's just been introduced, fixed income space for investments
Okay.
there, yeah.
Okay. I believe what you're referring to is the waivers on interest earned on fixed income securities.
Yes,
So
fixed
yes,
income
that's correct.
securities.
Okay. So those waivers ended in January 2022. They had a 10-year window. So the banks and indeed investors in those instruments, they've enjoyed about a 10-year period of waived interest on waived taxes on interest earned on those federal government securities. The only thing which has been exempted now is FGN bonds, but pretty much everything else going forward, taxes will be charged on the interest that is earned on those securities. So what that simply means is that the effective tax rate of the bank is expected to go higher. Okay, banks that have a relatively higher proportion of their interest income coming from federal government bonds, they will bear a lesser tax burden. So banks like Access Bank and probably UBA, banks that tend to have a significantly higher portion of their interest earning assets, or should I say liquid securities in treasury bills, for example, they will bear a higher tax rate, right? So I'm talking maybe banks like Stanbic, GTB, Zenith, for example, they'll probably have a relatively higher increase in their tax rate this year and going forward.
So that's another squeeze on their liquidity and their ability, to reach out to the real sector.
I would say it's probably more that it slightly reduces their ability, how much dividends they could pay. In terms of what could hurt their capacity to lend, our concerns are probably more around the introduction of Basel III, which is currently being test run by the central bank. And that simply means that the banks will have to set aside additional capital buffers to meet the Basel III requirements. The other thing that could somewhat constrain the bank lending is that elections are coming. And that simply means that a bank should start to exercise some caution around lending in this environment. And there's also been COVID, and indeed the economy is recovering, and we think that's positive. And we did see strong credit growth last year of about 18 to 20%. But we think this year about 10 to 15% is what we're expecting in terms of credit growth for the banks in 2022.
So of course, we also have the credit reserve rate, the CRR, which is at 27.5%. And a lot of analysts have said that that is also a limiting factor for the banks.
Indeed, and the cash reserve has been quite punitive. It's only gotten worse for the last 5 years. And what the cash reserve ratio means, if I'm to simplify it, for every 100 naira of deposit, or every 100 naira of naira deposit that the bank takes, the bank needs to keep a portion of that at the central bank, earning 0%. When you say it's 27.5%, that means that for every 100 naira of deposit that the bank takes, 27 naira 50 kobo needs to be kept at the central bank, and the bank earns no interest. But because the central bank has been charging additional cash reserve for different reasons, whether it's ad hoc or based on certain rules around loan to deposit ratios, what that simply means is the effective cash reserve of the bank at some point was as high as 50%, right? Just think about that for a second. So half of your naira deposit, you can't do anything with it because you keep it at the central bank earning 0%. But today, the effective rate is about 40% plus or minus, depending on the bank you talk to, which is still quite punitive. The central bank has also introduced special bills, which means that in addition to this 40% number, you have another about 11% of assets, which you are earning 0.5% on. So when you look at the balance sheet makeup of a bank, banks are basically a spread game, right? So you take low cost funds and you're looking for a way to earn a higher interest on your cost of funding, and you earn a spread. So when your spreads are collapsing by that much, that hurts the ability of the bank to generate earnings. It affects the ability to pay dividends. What this has meant is that over the last couple of years, Nigerian banks have had to be quite innovative in their thinking. And the reality is we have to give them thumbs up for this, because when we look at banks in other markets, they tend not to understand how to respond to changes in the macro environment. Nigerian banks have done a great job here. It's still been very challenging. We've seen evolution for holding companies, more efforts around generating non-interest revenues, whether it's trading income or even from fintech or non-bank financial services areas. So these are things I think the banks will continue to do, which is positive. They have to respond because the regulatory posture we do not think will change soon, at least not before election.
And in spite of this, we still have about 36% of Nigerians not included underbanked. So this, of course, is another lose out for the banks.
Indeed, and these numbers keep coming up in terms of financial inclusion, etc. So let me give you some statistics, because I think the problem is not financial inclusion and probably more economic inclusion. So if you look at the World Bank stats, they say if you look at the international poverty line of $1.90 per day, Nigeria has the largest number of extremely poor people, overtaking India in 2018, right? Which means Nigeria's poverty rate was almost 50% in 2018. Another statistic from them, so half of all Nigerians work in the agriculture sector, and half of the people working in agriculture belong to the poorest 40% of the population. 4 out of every 5 Nigerians are own account workers, and most of them work in the agriculture and services sector. Almost half of the poor live in the Northwest, and the North itself accounted for 87% of all the poor people in the country in 2016, according to the World Bank. The final statistic is that 64% of all the poor people lived in rural areas, and about half of the rural population lived below the poverty line in 2016. So what does all of this mean? It means that to really crack financial inclusion, if I'm to call it that, you really need a low-cost business model, because if you are a profit-making enterprise, the cost of serving or reaching tons of poor people has to be very low. Otherwise, you struggle to make economic sense of serving a lot of these customers. And this has been the case for the banks. So I think of what the banks have been doing, or should I say the competitive landscape in the country. This is why telcos getting involved in whether it's via mobile money or a PSB license makes sense, because what the telcos have is they can provide an alternative store of value to bank accounts, right? Which means that, and this is because the telcos already have a very strong penetration to very poor people, because a lot of people do indeed have mobile phones, even though they do not have bank accounts. So the telcos can basically leverage that connectivity to then sign up these people into a store value, which will be a mobile money account or indeed a PSB type bank account, because PSBs are technically banks. So that's my thinking of how all of this evolves. So, and I think we have to give the central bank kudos. On financial inclusion, they have been very progressive in their efforts to get this up and running over the last decade plus.
So from your perspective now, the banks shouldn't see the telcos and the fintechs as competition, but, complementary.
They, both of them actually. So telcos will be competition, very, very fierce competition for that matter. But at the same time, the reality is there's room to collaborate because the telcos will probably not be able to offer the entire scope of offerings that they would like to. They will need to leverage some of the existing banks to provide certain services, etc. But the telcos, the one advantage they do have is they have a massive outreach into customers. MTN alone, for example, has 75 million customers, right? You can argue around what percentage of that is active, but that is the high level number that that MTN alone provides. When you think about all the people that have BVMs, it's only about 50 million people, right? So telcos getting involved in PSBs can indeed be significant competition for the bank. But one thing you also need to keep in mind is that the Nigerian banks since 2019, with the establishment of CNF, what that has meant is the banks have also been able to build up an alternative last mile reach to telco agents. Okay, so First Bank, Access Bank, or let me put it this way. There are three pillars of the agency banking models that are taken off in Nigeria. So there's bank-led agents, there's telco-owned agents, and you have independent agents like, Paga, Timac, e-settlements, OPay, etc. So all these elements are operating at the same time. So what all of this means is that the evolution of mobile money in Nigeria will be very different from how it has evolved in other markets, where telcos are typically the only game in town. In Nigeria, all three elements are active and everyone is competing for the same piece at the same time. What that could also mean is that the economics of the business model gets constrained very quickly because it's going to be highly competitive. But we'll see, So that's why we're all interested in how all of this plays out. But yes, telcos will be competition, but there's also room to collaborate with the bank.
And what role does eNaira play in all of this? I mean, I guess one of the objectives of introduction of eNaira by the CBN was financial inclusion of some sorts.
I see the cynicism on your face, but the eNaira does have some role. One of the things that you have to give the Nigerian Central Bank kudos for is they try to lead from the front. Okay, so it might not be a perfect solution, but at least they are trying this out to see where they end up. Now, if you look at some of the numbers that have come up so far, if you look at the stats that was released by the central bank late last year, a lot of the transactions so far have been bank to customer or customer to bank transactions. And this is primarily because the banks have really been the ones marketing this eNaira. To get the eNaira up and running at scale, you need a couple of things. You need not only that people download those wallets, for people to be encouraged to download the wallet, the eNaira needs to have a superior value proposition versus the alternatives that exist in the market. So that's the first thing. The second thing is when you go beyond customers downloading it, you also need recipients, so whether it's a merchant, for example, to be able to accept the eNaira as a method of payment. So what that means is, do you need QR codes? Because the eNaira operates via a wallet. It's a digital method of payment. So on the acceptance side, you need to also solve for merchants being able to accept the eNaira. So is this a contactless method? Is this QR codes? What form is it going to take? So all of these things need to be solved for, and we're not there just yet. So it's very early days. We have to see, but Nigeria is testing ground once again. So fingers crossed.
Yes, yes. I think we're the first in Africa. Zimbabwe is trying to follow suit. We hope they don't overtake us, so we become the first, but we don't see the effectiveness. That's always our fear. Well, thank you so much for joining us on this conversation. Adisa Jishula Anke, Director, Financials, Tech and FinTech at Renaissance Capital. Thank you so much for sharing your thoughts with us.
Thank you. Bye.
We'll take a break now. When we come back, we'll head straight to the commodities market space. Do stay with us. This is Business Morning on Channels Television. You're welcome back. Well, $224.29 million. That's the total amount that the Nigerian National Petroleum Corporation said it earned from crude oil export and gas proceeds in August 2021. And that's against $191.26 million in the previous year, that's July. A breakdown of the figures captured the NNPC monthly financial and operations report for the period, indicating that exports of crude oil amounted to $7.77 million, while gas and miscellaneous receipts stood at $65.26 million and $151.26 million each. At the same time, total crude oil and gas export receipts for the period of August 2020 to August 2021 stood at $1.86 billion. Well, let's have Bolanle Agbaje, analyst with Financial Derivatives Company, joining us now to speak to this and, of course, other issues in the commodities market space. Good to speak with you again, second time this week. So we see that between July and August last year, there was an improvement. Do you see this? Is it continuous? Are we going up or going down when you look at it forecast, or what the figures will be?
Yes, we do think that this is improving. Well, the fact that in January we produced about 1.5 million barrels per day, so that's great.
It's been a while since we had 1.5 million.
Yes.
I mean, we've been doing between 1.2 and 1.4 for months.
Yes, and that's because we've been having several operational and technical issues. We've had force majeures, damaging and vandalism to pipelines, and the fact that, there's been destruction to some pipelines as well. That had obviously reduced, our supply. And the fact that we're still producing 1.5, we haven't really met our OPEC target of our quota of about 1.6 to 1.7 million barrels per day.
And then we've also had some disruptions, like, the fire in Delta, the one in Bayelsa.
Yes.
Those will feed into the figures at the end of the day.
Feed into the figures. So we do hope that, nothing so far in February, so we do hope that, as the months keep going by, most of these operational and technical issues will be solved. And OPEC Plus has actually come out to say that, it's nothing to worry about. Most of these operational issues are temporary, and, they shouldn't affect supply in the long run.
Transitory.
Transitory, yes.
Okay, but what about, for now, we have the issue of the petrol still going on in most cities. I know it's not just Lagos and Abuja now. We also have it in Kaduna. They also have the complaints. They've had a lot of long queues. How do we see that affecting that space?
Well, the NNPC GMD has actually come out to address this issue, and then they've also mentioned and apologized to the Nigerian people.
And promised investigation.
Yes, and promised investigation, yes, because obviously somebody has to pay for this.
Yes.
But they've also assured Nigerians that, they're working on getting more supply into the market, and that should, more or less solve these temporary disruptions that we're seeing at the moment. So we're very hopeful, that they're actually doing something about it. The queues are not so bad as we've seen in previous years, but, they're still there. And most people, obviously, have added the panic buying aspect to it as well, which should, make the scarcity linger on for a short period. But I do hope that the NNPC would actually come and solve this issue.
And I think there's also the fear of getting the wrong PMS, because a little bit of complaint of parts of their cars getting bad generators, after using this.
So I think that happened. They did mention that they received that particular adulterated fuel, or the batch, on 20th of January. So I do think that, by now, it has probably been eliminated from the market. Unfortunately, those that bought between that period, from 20th
We've all bought between 20th of January to this time. Well, a lot of us have had to fill our cars, do the generator.
Yes. But I think those that, have had issues with their cars, generators, I'm sure that, the NNPC would most likely look into.
Yeah, there was the mention of compensation, but I don't know how that will work. I mean, are you going to take your car and go to the NNPC and say, oh, because of... Do you understand? It's
bizarre, but I think I don't know how the NNPC would, make this work, but I'm sure that they will definitely do something think about it, even if it means, you know, most of the customers going to NNPC and, you know, making those complaints and then getting compensation from it directly from them.
And I do hear, like, for a state like Port Harcourt, River State,
yes,
that some customers went in and beat up or closed
yeah,
down filling stations because they bought from there and it affected their cars.
So. Yes, so obviously those are the ripple effects from that kind of, you know, situation. Nobody will definitely be happy if, you know, just because something that could easily be avoided was what, you know, caused them to spend more money on. Therefore, it's obviously caused disruption to their days. And, you know, the fact that they have to fix this, I'm sure it's annoying for majority of, you know, the Nigerians that were faced by this.
And I guess this also calls for a question or attention to the process. At what point do you check the quality when it is imported? Is it before it gets out to the customers? You know, this all.
Yeah, so I think this happening, it's probably a good thing in disguise, in the sense that, you know, it's now puts focus on the quality assurance aspect of, you know, NNPC, and, you know, the fact that who exactly is in charge of monitoring what kind of fuel comes into the market and what kind of fuel is being bought. So I'm sure from now on, the focus will definitely be on that aspect of the company, and they'll probably make sure that, you know, this kind of thing doesn't happen again.
And then we saw the price of oil this morning down. I was driving it down at this time. We're hoping to be going straight to $100. Now we are around $91.48.
Yeah, so I think what's driving it down should just be simple technical buying. You know, most people had anticipated that the impact of the Russian and Ukraine crisis, the fact that, you know, the Iran and US deal. Exactly. So all of that have already been priced into the market, and you see you had some gains, and we definitely think that this is just basically fundamental when it comes to, you know, the drawdown in oil prices. But at the same time, you still have the fact that there's huge supply shortages within the oil market, and we do expect that oil should keep or range between $89 to $92 per barrel at the moment. And also, I think there are more reasons that to support the continuous hike in crude oil price than, you know, the other way, because, you know, you have the fact that U.S. Crude production has also declined, oil rig count has declined. You also have the fact that, you know, Russia, if Russia should invade Ukraine, it also would, you know, bring
Somebody
down.
said it's not invade, they're just subtly going. And I think the Russia and Ukraine NATO issue is also affecting the price of aluminium.
Yes, it is. Well, I think the price of aluminium, you definitely have the Russian aspect, but what in particular is affecting the price of aluminium is China. China produces about, you know, half or more than half of the world's supply. And, you know, right now in China, they're trying to cut back emissions, and they're trying to reduce production of aluminium because, you know, you have the Beijing Olympics currently occurring in China at the moment, and they're trying to improve the quality of the air pollution in China at the moment. So that has obviously fed into aluminium, the price of aluminium. Aluminium has increased to about, you know, $3,200 per ton.
Yeah, high.
Yes, and even Goldman Sachs also predicts that this price would keep going up until $4,000 per ton. So yes, so the supply, you know, gap in China. And also what I just discovered is the fact that in the particular city where aluminium is being produced, there's obviously new COVID outbreak as well. So they're now imposed lockdowns there.
And they are very strict with their
They are very, very strict,
COVID.
Zero tolerance to, you know, COVID. So that all those have had, you know, significant impact on the price of aluminium. And also it's also putting, you know, pressure on their inventories as well. You know, we're seeing a lot of cash buys when it comes to, you know, aluminium. The demand for aluminium is very high. You know, it's used for packaging, it's used for automobiles, and most of the demand is actually coming from the US. So that has, you know, contributed to the hike.
And we don't see any factor that could taper that. I mean, it's not something that a country can just discover and start.
Well, no,
not
necessarily. It's something that, you know, it takes years to invest in this kind of commodity. And, you know, China, although China is, you know, the largest producer, but we'll definitely be seeing new entrants in the coming years.
And then we also see that the price of diesel is up more than 17%.
Yes, so the same thing.
Everything is up, everything.
Yes, so obviously diesel, you have price of diesel increasing when you have the price of oil price going up as well. Diesel is, you know, a byproduct of crude, and definitely, and it's also a deregulated market. So like I mentioned before, whenever oil prices should increase, the domestic price or pump price should obviously follow suit. But the fact that, our own pump price doesn't increase as well as
because of the
subsidy. So when the subsidy is out, we'll definitely be seeing the same situation. And I think most importantly, when you're looking at diesel is used for power generation as well, to fuel our generators and all that. So there's that extra demand. Apart from the fact that, truck drivers, most of these transport vehicles rely heavily on diesel to move. You also have the extra demand because of the unreliable power supply in Nigeria. Our power supply hasn't increased, more than 4,000 megawatts in the past how many years now. So that obviously has added more pressure to the price of diesel. And also you have the fact that the Association of Truck Drivers are threatening to strike as well. They're tired of the constant or high cost of operations, high cost of diesel, the road network that is still very bad across, states within the country. So those are, some of the issues that... Insecurity, all of that.
Because a lot of them do complain that in their transit from one state to another, they do face a whole lot.
And that obviously is because, there's huge poverty within the country. Whenever, poverty is high, you'll definitely have issues with insecurity. Everybody is trying to, put food in their mouth.
Okay, so and not so good news with cocoa. Cocoa harvest ended earlier than usual in Nigeria.
It did, yes. Weather conditions, or earlier than expected weather conditions, actually affected, the cocoa main harvest and brought it to an end earlier than what, we had expected, particularly in states like Abia State, Akwa Ibom, and Cross River. And those states usually account for about 250,000 to 280,000 metric tons of cocoa. So obviously that is sad for our external reserves. But now we're looking...
Our external reserve, which is still dwindling.
Is still dwindling just because, our oil production is not going up. Cocoa production also affected. The money coming in is less than the money, going out, and that would be the repercussion of that. But we're now looking forward to the mid-crop harvest, and we're hoping that, the mid-crop harvest will be better than what...
Yeah, but even when we're looking forward to the mid-crop harvest, we still don't see the value chain improving, which is something that could also, so we're not just doing raw materials, raw cocoa, we're actually processing and adding value, and then we can attract more FDIs into the country.
It seems like a long process for us. We're still, pushing ahead. I think the most we can do is just remain optimistic to, look into the future and see what happens when it comes to...
Look for the lights at the end of the tunnel.
Yes.
What else is happening in the commodity space?
So yes, according to AFEX Commodities, we have, most of the commodities actually increasing in price. The price of sorghum, maize, those prices are...
So that's good for the investors, but not good for the consumers.
Yes, exactly. So good for the investors. Generally, many, both agricultural and non-agricultural commodities have seen a hike in price. In fact, for the past 2 years, they've been doing so well when it comes to investing in, some of those commodities. But for the final consumers, it's not so great for us. And, most of coming back to our domestic commodity space, most of these commodities have remained high and elevated. And, we're not seeing any drawdown to some of the prices. And that's just because we're not seeing a reduction in the cost of operations as well, and cost of, producing some of the commodities that we do consume.
And of course, this will affect supply and in turn affects the price, and it just goes wrong.
Yeah, so it's a lot of bad news at the moment, but we will just brace ourselves and expect.
Yeah, thank you so much, Bolanle Agbaje, analyst with Financial Derivatives Company. Thank you so much for sharing your thoughts with us.
Thank you for having me.
All right, so now let's move to the markets. We'll do an opening call to the market, and I'm so glad to know that there was a bit of good news. A bit, yeah, okay, not so big, but there was good news in the markets yesterday, at least in the equities.
Morning. Bullish sentiments have returned to the Nigerian equities market. You see now, investors showed interest in tier 1 banking stocks. So all the 5 key banking sectors were up, yes, but we're going to talk more about that.
Hold your thoughts.
Yeah, we'll talk more about that in a bit.
Yeah, just hold your thoughts. We do have to take a commercial, and then when we're back, Will give us the details of the markets. Yeah, welcome back, Will. Take it up.
And as I was saying earlier, we saw bullish sentiments return to the equities market. We are seeing more interest in tier one banking stocks. Note that on Tuesday, the banking stocks, the Fuga stocks were really down, but we saw yesterday a quick rebound, a big bounce. They were up 1.68% yesterday, and Lafarge was also up. We saw some good news in the consumer goods sector as well. And this locked in the first gain of the week. Now, the all-share index was up yesterday 0.21% and is now still at the 47,000 level. It does not drop. We hope it doesn't go down to 46,000 level now because we want to lock in that, that record high there. Now, equity cap is still at 25,000 trillion naira mark. Now, volume, yesterday we saw a pickup there. It was increased by 24.8% to 297.25 million units. Now, there was only a drop in the value and the deals carried out yesterday. And we move on to the banking. So we saw, to the sectoral performance, we saw all key indexes were in the green. The banking, like I mentioned earlier, was up 1.68%. Consumer goods, 0.65%. Everything was working well, and that really pushed the market up. We're hoping that this is sustained in today's trading session. There were 25 gainers relative to about 13 losers yesterday. Positive market breadth, and the RT Briscoe was the biggest gainer in yesterday's trading session. We move over to the unlisted market, where it sustained its bullish trajectory. It was up 1.46%, adding about 9 billion naira to its market cap. The all-share index, that's the NSI index, added about 10 basis points, and that's why we see it at 760 from 740 something that it had, closed at on Tuesday, and the market cap pushed up 634.75 billion naira. Now, if we move to the volume and value of, the volume and value of deals, we saw a drop in the volume and value of deals yesterday. But and everything that were happening, that didn't actually affect the market. So we move on to the fixed income market, where there was bullish, a bit of mixed sentiments in the market yesterday, especially for the 2026 and the 2036 paper. We saw that there was a bit of sell-offs in the 2026 paper, and then for the 2036 paper, there was demand there, but it dropped by about, the average yield there dropped by about 5 basis points, while this one added about 4 basis points to it. Now we'll move quickly to the equities market, where we want to talk to an analyst to get more understanding about why this rally, we see a rebound, and if this rally can be sustained, and why we're seeing more bullish trends in the market. Good morning, Tajuddin.
Good morning.
We've seen that the usual financial year-end rally seems to be attracting more investors to the market at this time. We've also seen some volatility accompanying the rally. What is responsible for this behavior in the market?
Okay. When we trade equities, we are trading earnings and earnings prospects. These earnings prospects are subject to what happens in the economy and the environment of business. And so, crude oil prices remain strong and elevated. And this means that improved potential accretion to foreign reserves. This means improved potential accretion to foreign reserves, which should ordinarily boost capacity of CBN to fund excess requirements for raw materials import, as well as boost government spending. So another factor again is the yield in the fixed income market that remains subdued due to liquidity overhang. So naturally, investors, especially insurance investors, who normally lead activities in the market through their usual bargain hunting and profit taking, are the ones fueling the volatility we are seeing. What happened that these insurance investors have robust research department that can forecast what the earnings will be and earnings prospect will be. So because of the fact that crude oil prices is up, and of course the yield in fixed income market is also subdued. Especially the short end of the curve. So investors in the equity market are taking advantage of that. Yes, there's prospect for some of these companies, especially in the area of their earnings, and that earnings prospect is what is fueling the rally. But the usual profit taking and bargain hunting are what are responsible for the volatility we are seeing. It's a normal market, and that's the market to be, so that new investors can come in.
Okay, you mentioned about the uptick in the crude oil prices, but foreign reserves are not showing any sign of any significant benefits from the rise in the prices of crude oil, especially with the reserves dropping, according to what the CBN posted recently. Why is this?
Okay, it is so because CBN appears to be the major player in the supply side of FX market. And this is putting so much pressure on our foreign reserves, more so that foreign portfolio investors are not showing so much interest in our markets. And, the situation could have been worse than what we are seeing currently, if not for the crude oil prices that remain significantly elevated. So, yes, there's a drop in foreign reserve because CBN is the one funding, but the fact that, foreign portfolio investors are not showing significant interest, or they are not even coming around that market to play the market, to bring in foreign currency, is also what is responsible for that drop in foreign reserve. CBN is the only one funding the FX market, and so naturally we expect this to create some kind of instability in that market, in that FX market.
Thank you so much, Tajudeen Olayinka, for your insights. We hope we'll bring you on more, maybe next week, to talk about what's happening and the trend that's going to go forward. Now, at the fixed income market yesterday, there was an NTB auction, as we talked about. And like I mentioned, there was a drop in the one-year paper. I predicted that.
Coming.
We saw that coming.
Yes, Chioma mentioned that yesterday.
Yes. So we'll talk about that tomorrow with the analysts and get more insights as to what's really going on there.
All right, thank you so much, Will. We'll take a break now, another one, and when we come back, we'll head to London. Do stay with us. It's Business Morning on Channels Television. Welcome back. Well, it's no longer news that the Bank of England increased interest rate to 0.5%. Now, the chief economist of the bank is asking for cautious approach to raising rates. Well, we wonder why he's bringing this up at this time. We have Juliana to tell us. Hello, Juliana. Good morning. So what's the concern of the chief economist at this time? Any new development?
Well, no, there aren't any new developments, Inni. I think Hugh Peel, as you said, the chief economist of the Bank of England, he was addressing members of the Society of Professional Economists at an online event yesterday, and he was speaking really about what everybody's talking about, which is inflation, currently at 5.4% here in the UK. The Monetary Policy Committee forecasts that it could reach about 7.2% in the next couple of months when we see a rise in national insurance and energy bills. But last week at the Threadneedle gathering, 4 of the 9-strong committee members actually voted to raise interest rates higher from 0.25% to 0.75%. Hugh Peel was one of the 5 majority who decided to keep it at just 0.5%. And that is because the situation is still very much uncertain. What is going to happen with the energy bill? Is the Chancellor going to have to do another further U-turn and decide to put even more money to try and help aggrieved families? That was really the basis of the discussion. But of course, if a chief economist speaks at the Bank of England, it will make news.
Yes, it's not easy to be a chief economist. And then talking about inflation now, we're expecting that of the United States later on today, the CPI. Any expectations, reactions from your end?
Yes, well, it's a big news day. This is what's keeping us busy, Inni, and I think all markets are waiting for this data. I think a lot of economists are pricing in a 7.4% rise of inflation in the world's largest economy last month, which is huge. 7.4%. That's almost 3 times the size of what Jerome Powell and the Federal Reserve would have liked. We know already that there have been discussions that interest rates will rise significantly this year. We didn't see a rate increase the last time they met a couple of weeks ago. But of course, it all depends on today's numbers. I'm not sure if we'll get it out by the time we speak at 1:30, but if it is higher than the 7.4%, then I think we can certainly expect a wild market reaction in the square mile.
Yeah, so when that means we have a lot to talk about tomorrow. I know we're expecting some data from the UK tomorrow, and then we have this. So we're going to have a field day, even if we can't do it during Business Incorporated. Well, thank you so much, Juliana. Enjoy the rest of your day.
You too. Thanks, Inni.
So let's go to the crypto space now. I wonder if it's still in the green, Laddie.
Well, it is still in the green, but traders are also watching out for that US CPI coming out later today. The markets are waiting to react. Might be if it, beats expectations, goes higher, you might see some wild swings in the crypto market. But right now, the Fear Greed Index, looking at the sentiment in the market, is neutral at this point. We've been at the extreme fear for most of January. but now we're heading to the neutral zone, trying to get back into that greed. And you know, when you get to greed, that's where some traders like to take profit. But right now, market is looking quite stable, above the $2 trillion mark. That's up 1.08%. Volume traded in the total crypto space, $76.05 billion this morning, down 20%, seeing volume sapping out there. Bitcoin dominance, 41.44%. Price of Bitcoin, $43,968 this morning at 8 a.m., up 0.52%. We see Bitcoin trying to get back above that 44,000. We hit that 45K resistance again and try and surpass it, turn it into some support. Volume traded, $22.48 billion in Bitcoin. Ethereum there, trading above the $3,000 mark, $185. That's up 2.63%. We see volume not as much as yesterday, $13.51 billion. And we see the top alt by market cap. It's mostly green, just Cardano there. $1.18, down about 0.55%. So we see traders are still trying to, search for a direction in this market. All right, let's bring in Bjorn Martens now, CEO Passive Income Token. Hello, Bjorn.
Good morning, Ladi. Hi.
Yeah, good morning. Great to have you, Bjorn. Well, I saw some news yesterday about the Shiba Inu developers complaining about CoinMarketCap listing fake contract addresses for SHIB on some other chains like the Binance Smart Chain, except the Ethereum Smart Chain. And this is quite risky, because traders actually go to CoinMarketCap to get, safe links. So if you're getting fake contract addresses there, that's bad for traders.
True, very true. What CoinMarketCap did is really strange. It's really centralized matter. Opposite to Shiba Inu, they've created these wallets themselves to offer an interoperability for cross-chain. Of course, this is beneficial for the user experience, but Shiba has never agreed on this, has never really accepted this, as Shiba is a proper decentralized community. And CoinMarketCap just did this out of nowhere without even discussing it with the Shiba Inu team. Further, it are not malicious addresses. I can guarantee that. They are really created to operate cross-chain abilities between the chains Solana, Binance Smart Chain, Luna, and Ethereum. These four were basically listed. But Shiba didn't agree with this because they didn't know about it. And I understand that CoinMarketCap shouldn't just be able to list addresses like that without talking with the community about it.
So if I'm trying to get, legit contract addresses, how do I go about it at this point?
I should.
Hello, Bjorn. All right, looks like we lost Bjorn there. We'll try and get Bjorn back. We was talking about some of these contract addresses not being valid on the CoinMarketCap for information on crypto coins. But let's get back to the market now. We see XRP there trying to stay above the 80 cents mark. It's up about 0.87%. And we see Solana, $111, trying to hold back that $100 mark to stay above it and maybe look for some bullish momentum there. Top 5 gainers, we see a secret there, up 10.33%. And Kadena having a quite an interesting run this morning, is up 9.51% at $9. And we see Flow is in the news. We see a couple of influencers talking about Flow this morning, is up 9.44% at $7.91. And Harmony Protocol there, 23 cents. This was trading about 30 cents a couple of months ago, but it's trying to gain back momentum. It's up 8.87%, and we see Waves there, decentralized exchange there, $11.48. It's not looking bad. And again, it's Liz. And we see Leo. Leo was topping the chart yesterday after the news about the U.S. seizing most of the Bitcoin that was involved in the Bitfinex hack of 2016. Leo pumped about 50% yesterday from that news. We're seeing Leo having a massive pullback this morning, $6.35. Got as high as over $7, down 14% this morning. Could be a pullback, maybe to get back momentum to rise higher again. We see Mana there, the Central Line, one of the metaverse tokens, down 3.09%. All right, the market is not looking bad this morning. Just a couple of reds there, but still looking quite promising. But we're waiting for that CPI news to see direction for the market at this point.
So do you want to wait for the CPI before you make your prediction for tomorrow?
Yes, I think we should wait for the CPI.
Maybe she also predicts the CPI and then...
Yeah, maybe. Well, analysts are saying 7.3, 7.4%.
Let's stick to that.
Let's stick to that.
And
yeah.
say that the market
higher.
will be green tomorrow.
Exactly.
Fingers crossed.
Fingers crossed.
Thank you so much, Ladi. Well, that's it on the program for today. Thank you so much for being a part of it. It's the last one tomorrow. To join us then. I'm Ini John Mekwa.